Rohr here with an early global view on Tuesday, October 21st, 2014. It's currently 6:45 a.m. Central Time, and there are fewer macroeconomic data factors right now, but we are into U.S. earnings season. That's exerting some real push-pull on the various asset classes. So what does all this mean to the markets? Well, it means that after, of course, we have the S&P 500 future hourly on the left, 30-minute on the right. It means that after the early day pressure in the mid-session off the worries over various things on Friday, after the gap higher opening, actually on Monday, after the lower opening off IBM, the market kept grinding its way higher. And our real question was whether it can sustain activity for the second time after doing so on Friday above the 1882 down break and the 1885 old key level. And now that included the 1/3 Fibonacci retracement. The market stalled at on Friday up around 1890, and lo and behold, it did. So it's not that much of a surprise with these decent earnings and Chinese data coming in on estimate to maybe a little better that we're up 12 today at 1912 right now. And that's important because we had said right along it was very important we get back above the old gap from back in May. The top end of the gap was 1904. And as you'll note, going back to last Friday, we traded up to 1891. And last Monday, even as the market was failing after the sharply lower activity that then led to the recovery, last Monday, after the lower opening on the recovery, it couldn't get above 1904. So we think it's very important that it would get above the 1904 area. It has. That opens the door to getting up to higher resistances like 1918 to 20, and ultimately ranging back up to test the bigger higher resistances, maybe in the 1950 area and maybe even in the 1970 to 75 area it failed at the start of the break, going back all the way back here to the later part of the early part of October. So with that, where's the support? Well, it's right back down around the 1885 to 82 and around the various gaps, both below and then back above the 1865 area. Of course, starting with the pullback that the market went through on Friday to 1871. So 70 to 65 has become a fresh interim level. And for choice, we think the market's probably headed up now, but we don't know we'd reach for it as opposed to waiting to see retests of something closer to 1900. That pretty much does it for the short-term view of the S&P.